5,000 metric tons of free float to zero within 2 weeks. Like, what happened? And they tell me the reason why they don't think there's any manipulation, but the entire system is basically built to manipulate. Like, China is going to limit or maybe not ship silver out of China at all. When you have so many people committing fraud, you can't get a straight answer from anybody.
Welcome to a truly unique conversation in the precious metals space. Today we have the privilege of sitting down with Eric Yeung, known on social media as King Kong 9888, who operates from the financial epicenter of Hong Kong and has access to Asian precious metals market intelligence that most of us in the West simply cannot obtain. Eric is literally watching physical gold and silver move through Chinese vaults in real time, monitoring conversations on Chinese social media platforms like RedNote. He's been accurately calling major moves weeks before they hit our mainstream media. This is a conversation between precious metals allies. We're here to learn, to share insights, to help our audience understand the fascinating dynamics unfolding in real time. Eric, thank you so much for joining the channel today.
And Eric, thank you for having me on your show. Much appreciated. It's a pleasure.
Yeah. Now, if I understand this correct, those numbers 888 have a very significant meaning in Asian culture. Tell us what that is.
Well, I basically started trying out the numbers, and 9 means forever, and 8 means get rich.
So 888, I always thought of it as good luck or get rich.
Yeah.
Yes, exactly.
It's rich, rich, rich. That's what that means.
Oh, perfect. All right, Eric, You've been tracking something absolutely fascinating with the LBMA silver inventories. You've documented them going from like 5,000 tons of physical silver free float to essentially zero within just 2 weeks. And you've connected it to what you're calling another, quote, accounting error like what happened in 2021. This is the kind of the ground intelligence that most of us in the West just don't have access to. Are we looking at accounting issues, a genuine supply drain, or something else? And from your vantage point in Asia, where is this silver going?
Okay, that's a very good question. So basically, I follow guys like Robert Goddard, who was the top guy. He ran the desk, a commodity desk at JP Morgan. Years ago, he was basically the bullion banker. He keeps tracks of physical silver free float inventory at the LBMA. And there's another guy who's also a bullion banker, and he's from TD. His name is Daniel Gali, I believe.
Okay.
And he also kept track of it. And for the longest time, it was just bobbling at 7,000 to 5,000 metric tons for months.
Right.
And these guys were saying, "Oh, we still got 7 months left of free float, so we all good. Don't need to worry. We got 7 months of free float." And then all of a sudden, in I guess like the third week of October, Robert Goddard on one weekend came out and said, "We got a problem, guys. Like there's zero free float at the LBMA." That was exactly when the lease rate jumped up. Like it went from, first, usually it's almost zero, right? The lease rate. That's like the cost of borrowing physical metal in London.
Yes.
So obviously, if you have like a higher lease rate, that means you have less metal. There's less metal to go around. That's why whoever has the metal can command a higher lease rate. So it went from almost nothing to 3%. Even 3% is high, by the way. Okay?
Yes.
For normal. And then it crept up to 10, and then 20. And at one point, I believe, it went up to 200%. Like it's crazy on an annual basis, right?
Insane.
Absolutely insane, right? It
Yeah.
shot up like that was, I think, David Jensen reported that one day it just went up to 200%. My problem with all like this narrative is it went from 5,000 metric tons of free float silver at the LBMA to zero within 2 weeks. Like what happened?
Exactly.
So nobody knows what happened. Even Goddard, Jensen, nobody could like. I mean, Jensen have an answer. Jensen basically said it's all fake. Okay,
Ah,
okay, okay. Like he said that, right?
just
But like, okay, fine.
like a pure manipulation.
No, like just basically, they are not reporting the truth, like the
Ah,
actual free flows, right? Like exactly what you just
yeah,
said. In
yeah,
2021, they admitted that there was a accounting error. Well, accounting error is basically you didn't you report the actual number. That's what that was, right?
right.
So my point when I got that news, it's not really news, it's like old news, but somebody reminded me of that. I just connected the two and I said, hey, maybe it's another, quotation marks accounting error this time. So I'm agreeing with David Jensen.
Eric,
So yeah.
let me probe you on one thing because I think our listeners would find this very interesting, your perspective on this. But do you feel like ultimately the prices of metals, whether silver or gold, are set actually by what's happening in Asia between, say, China and Japan, the Tokyo market, or do you think it's actually London or in New York?
Well, that's a very, very good question, but it's complicated. The answer is complicated. Because for the longest time, I'm not talking about the last 5 years, right? I'm talking about before that.
Right.
Basically, you have to understand, right? The total global demand for physical gold and silver, comparatively speaking, compared to the paper market, and also whatever free float that they had at the LBMA and COMEX, just wasn't enough to make a dent. And the nature of the paper market is this, right? Like there are a bunch of guys who want metal, but they don't want the physical metal. They just want the price exposure.
Yes.
So they buy the paper, right? So, some people say there's no manipulation. The fact that the paper market exists is manipulation because it's diluting the actual demand for the
Right.
physical metal. I just
Yes.
want to get it out there, right? I know that
Yeah.
I know how they think. I talk to them and they tell me the reason why they don't think there's any manipulation, but the entire system is basically built to manipulate. By the way, I think WikiLeaks leaked out a wire telegraph communication back in the 1970s when the COMEX was established. Basically, the wire said that the establishment of the futures markets at the COMEX for gold and silver was done to suppress the price of gold and silver.
Wow.
It basically said that,
Yeah.
okay, to introduce volatility so that it discourages hoarding of the metals. But anyway, so I'm going to show audience a chart. Now you see the LBMA, the COMEX, and the ETF, right? So I'm not including the exchanges in the East, like the Shanghai Gold Exchange, because it'll make everything too confusing. So I'm just presenting to the audience what happens in the West in terms of like physical metals flow
Okay.
and how they price the metal. Okay. So in the West, essentially you have the LBMA, that's what they call the spot market. You have the COMEX, which is the futures market, and you have the ETFs, which are like, places like SLV and GLD.
Yes.
Okay. LBMA essentially serves the function, like I said, the spot market. So it's supposed to be physically driven. But according to people like David Jensen and even Robert Golub, inadvertently admitted to this, the LBMA has a lot of, what we call paper promissory notes that goes around. Essentially, for gold, it's like 100 to 1. So 100 bilateral paper contracts, you have like one that takes physical delivery. And for silver, what I heard is even worse, is 400 to 1.
I've been reporting on that on the debt clock. It's right now sitting at 359 to 1.
Okay.
Incredible.
So
Absolutely incredible.
Okay. So that's the LBMA. The COMEX is futures. We all know about how the futures market works, right?
Right.
But I'm going to give your audience like an actual example of how they suppress this thing. Okay, how
Okay.
they do it.
Yeah.
So every day, let's say 9:30 in the morning when New York opens, Craig Hamke and all these guys, they say, "What the heck is going on?" There's like an entire year's worth of like mining supply being shorted on the COMEX in 30 minutes. So that's what guys like Ted Butler's called it a concentrated short positions. Okay,
Yeah.
so that's how they do it. They use like the EFP to do these basis trades. between LBMA and COMEX, and using their own words, they hedge their concentrated short positions on the COMEX with long positions at the LBMA.
Right. It's effectively, I think, what we would call as an option position, effectively like a collar, right? Where
Okay.
they're long one side and short the other. And that way, what they're almost looking for is something of a black swan, like something that would move outside those numbers, right? To
Yeah.
generate excessive profit with very little
Well,
risk. Yeah.
yeah, the bullion bankers explained to me, like, they don't want to be named, but like they explained to me that this is basically just the spread. They're just basically trying to make a spread
Yeah.
from this basis trade, and they need like a humongous volume to make a sizable profit. I'll give you an example. Well, it's not an example. It's exactly what's happening right now. My friend PM Buck keeps track basically the global free float of physical silver. So he takes all the exchanges, he takes all their free float, he added it all up, and then he came out with approximately 20,000 metric tons of silver. That's like the dollar amounts of that 20,000 is 36.8 billion US dollars.
Right.
So do you see a problem with that?
Tiny. Yes.
Tiny. So that's a that's a big problem because when it is that tiny, which is what we're seeing now, India and China can just stand for physical delivery at the LBMA, which is exactly what's happening, and drain their entire free float, which is exactly what's happening.
Right.
We're seeing that in real time right now. Okay, so yes, the LBMA is being replenished by New York. I mean, everybody's talking about that, right? Guess what? The metal goes from New York to London, and then it goes right from London to China to Shanghai
Right.
and to the New Delhi to India.
Right. Yes.
So you see how that works? So, like, that's why, I mean, not a lot of people talk about this. I broke this story. I mean, people do talk about it, but not enough, I think. China has just announced that silver is going to be a controlled export mineral starting January 1st, 2026. So silver is going to be like China is going to limit or maybe not ship silver out of China at all because of silver's strategic nature. And
Yeah.
that, is no surprise to me because the Shanghai Gold Exchange and the Shanghai Futures Exchange, the vaults are being drained of silver. Do you see the chart right here? Yeah, so like, you see how it's like pyramid? Like it
Yeah.
peaked in 2020, 21, and it just basically dropped. Like we are now almost below 1,400 metric tons
Wow.
of physical silver. And so it's no surprise that China is standing for delivery, most likely.
Yeah.
So I think Donald Trump did a really smart thing. He asked the USGS to do a 282 analysis on silver's eligibility as a critical mineral in the United States. As we all know, the president of the United States, Donald Trump, I mean, he's slapping tariffs on foreign countries, but the president can actually, slap a export control or export ban on critical minerals
Yes.
without congressional approval.
Correct.
So you can come out next week, Eric, and you can say, "Guess what, guys? We can't ship our physical silver to the LBMA just so that China can get cheap silver to build missiles, to fight us in the Pacific."
Right.
Like this whole thing doesn't make any sense. It made sense in the past because China was the US's, you know, biggest factory partner. China made everything for the US. But
Right.
now Donald Trump is trying to divorce from China. It really, in my humble opinion, does not make any sense whatsoever.
Okay, Eric. Let me shift to this. Eric, you've done incredible work breaking down China's new gold VAT tax rules that took effect November 1st. This is exactly the kind of regulatory intelligence that those of us in the West again have no concept of. You've called it a game changer that will funnel all Chinese domestic liquidity through the Shanghai Gold Exchange and potentially shift the pricing of gold to China, kind of on that question I was asking. So to most of us here, this is complex stuff that most Western investors have never heard of. Can you help us connect the dots? Just do it in a really simple way so that our audience understands why China did that and what the implications are?
Absolutely. You came to the right guy. to explain this because I'll tell you why, right? I'll tell you why. I'm sharing a chart here that I modified it from the World Gold Council explanation of the situation. But the problem, Eric, is that they are book smart. I'm both. I'm book smart and I'm street smart. I know how it actually worked in
Yeah.
reality on
Yeah.
the streets. Okay. So this chart will show the audience how it was intended to work before November 1st and how it actually worked. It's quite simple, actually. The VAS system, as you can see, you have the dotted line like bracket. That's the Shanghai Gold Exchange in the yellow. And then you have the sellers who are SGE members and the buyers who are also SGE members. So if you're buying and selling within the SGE, you are VAT exempt for gold.
Okay.
So, but once it leaves, Shanghai Gold Exchange, right? The buyer, that gold, you have to pay 13% VAT. But they have a thing called you pay and you get refunded right away. So in Chinese, it's called 即升即退. It leaves the dotted line, you don't pay. You pay, you get refunded. And then once you're out of that dotted line, you see the big yellow bracket out there, right?
Yeah.
All those entities are supposed to pay 13% VAT. I mean, like there's the input VAT and the output VAT. You pay the difference. And then the final guy is supposed to pay the whole thing. That's how it's supposed to work. But guess what? None of these guys paid nothing for all these years. That's why when Bloomberg came out and said, oh, there's going to be more tax imposed on the end user. No, because they were supposed to pay 13% in the past. They committed tax fraud. So in my opinion, for the end user of the gold, okay, nothing changed.
So Eric, let me interrupt you. I just want to make sure I'm understanding, because the people who are buying jewelry in that, they're full on subject to that tax, which you're alluding to they haven't paid previously. But if you're an actual investor, like buying a gold bar for investment purposes, am I correct that you might pay the tax, but then you can get that tax back at the end?
Okay, so this is how it worked before, right?
Yeah.
If you buy a what they call as investment standard gold bar from a China state-owned commercial bank, so if you buy from these banks, you are VAT exempt, period.
Right.
And now, if you buy a gold bar, investment gold bar from a bank, you're VAT exempt.
Okay.
If you buy from one of these guys in these SGE members, whatever, they're just gonna say that you're a reseller.
Yeah.
So they give you that SBI, and then we don't pay. Now the problem is that if the SGE or the Chinese government ever audit these guys, they're screwed.
Right.
You see what I'm saying, right?
Yes.
Because
yes.
they'll have like, well, who is this Eric guy?
Yeah.
Why is he not selling it to a end user like jewelry? Because it's
Right.
supposed to, right? It's supposed to pass down to an end user, and the end user is supposed to remit the 13% through the final seller to the
Right.
Chinese government, right?
Right.
So that wasn't happening. So you have all these so-called investment bars floating around that were supposed to be charged 13% VAT that worked because they didn't come from the banks.
Correct.
They came from SGE members.
Yes.
So even now, okay? And because the thing is, you have to understand, Eric, right? When you have so many people committing fraud, you can't get a straight answer from anybody.
Do you think is that why a lot of the huge jewelry chains are shutting down, because they know that kind of the tax man's coming, and they feel like...
because the big jewelry chains were doing it properly. They were remitting 13%. They were chronically more expensive than the small guys. So if you are like just a poor Chinese citizen or middle class guy, who are you going to go to?
Exactly.
You're going to pay 13% less, right?
Right.
So
right.
I'm like, that's the thing. I'm not smarter than any of these people. A lot of them brilliant, but a lot of these people have something to hide. That's the problem. So when you talk to them, like the story just falls apart.